Alright, another huge company reported earnings. This time it's actually a Chinese one called Alibaba. Now we've talked about Alibaba a couple of times on this channel. Now, if you just want to hear the main points, it beat on revenue, it beat on earnings per share as well, but it did not give us guidance because of the current world situation. It's pretty tricky, so they're not giving guidance this time. Now, Alibaba, as I said before, if it was an American company, I think it would have been in most people's portfolio by now. But since it's Chinese company, since you have the risk of delisting, the risk of, other political stuff, it's a no for a lot of people and maybe for a good reason as well. But I always like to talk about the business side of things and maybe it can tell us something about other holdings as well. So Alibaba right now at the time of making this video, it's actually up 4% before the market opens because the numbers were actually better than what most have expected. Now during the earnings call, the main things that they say is that they are very, very focused on reducing cost, useless cost, etc. They also focused on making sure to tell us that the situation right now in China, China's lockdowns, etc. is temporary. It's hurting the business, but this is something that will change for the long term. Well, I do hope so. But overall, Alibaba is still a great company. You will see the numbers in just a bit. It's very, very big and still printing cash. Now, granted, they are losing some money right now, a bit less profitable, still profitable, but less profitable because of the various investments, directly and indirect ones. Now, right now, Alibaba is actually trading at 11.5 times PE, that is, and 1.6 times sales. So you cannot say it's expensive, but yes, there is risk attached to it. Now, before we jump into the numbers, if you would like to support this channel, check out the link in the description below to receive the top 10 best stocks to buy now or visit fool.com/couchinvestor. Alright, so first up, a little checkup on our friend here at Bridgewater Associates, that's Ray Dalio's fund. So we can see right here that Alibaba has actually increased his position by 75%. Whereas our other friend, Charlie Munger, as you know in the last video we talked about that, he decreased his position by 50%. So the overall numbers look like this. These are not dollars, these are renminbis, right? I don't know what's the exchange rate right now, but let's just look at the year-over-year change for both this quarter and for the full year as well. So overall it grew this quarter 9%. And for the full year, it grew 19%. So it's still growing. Yes, obviously this quarter grew just single digits, but overall pretty nice, right? 19%, I think we can't complain there. Every single business here, whether it's China, commerce, retail, whether it's internationally, doesn't matter, everything is still growing. But it's also growing at a cost. As you can see right here, obviously if you look at the income from operations, well, last year it was a loss, but you also had this huge fine from the China anti-monopoly law, which you don't have this time around. But still overall, for the full year, you can see it has been decreasing. Now, if you look at adjusted EBITDA, the same story there. Less than 2021 for the quarter and then for the full year as well. If you look at net loss income, the same story continues here. While it might be growing revenue, etc., it does come at a cost. Now, there is some explanation. We're going to touch on that in just a bit, but it's very important to note that they're still free cash flow positive. Yes, again, much less than last year, but still free cash flow positive and not just a little bit, right? So that's pretty important. They also have been buying back shares quite aggressively. Now, with regards to the reduction or the decrease in profitability, so they say here, basically due to increased investments in Taobao or something like that, I really don't know how to pronounce that, and Taobao deals. Now, the first one is basically helping those lower tier cities get the produce, get the products that they need straight from the manufacturer. So they call it manufacturer to customer or something like that. And then Taobao deals, we've talked about that in past videos. Now, also the continued impact of COVID-19, as well as asset impairment and special provisions made by Sun Art. There's also the fact that, well, they invested in a lot of publicly traded companies and that investment is at a loss, so they have to report that as well, as we've seen with many other companies in the United States. And then lastly, the net cash used in operating activities. So free cash flow, a non-GAAP measurement of liquidity, was an outflow of $2.37 billion compared to an outflow of, well, much less than that in the same quarter 2021, mainly due to the payment of the final installment of $1.43 billion of the big fine that China imposed on them, the China's anti-monopoly law, and also obviously a decrease in profits. Now touching back on Alibaba's main business segments. So first of all, just to show you how huge this is, right? They achieved 1.3 billion annual active customers globally, which is pretty insane, right? In China, they have just over 1 billion, and then internationally, well, it didn't really grow that much, but still 305 million. I mean, it will for sure continue to grow, maybe not at the same rate as before, but when you have 1.3 billion annual active customers globally, it's a pretty good sign, right? Now quickly before I forget, the share repurchase, as you can see right here, a huge increase year over year in this quarter and then for the full year as well. Now even let's say worst case scenario, they stop growing or something like that, but they managed to generate that much free cash flow and they keep on buying their own shares at a rapid pace. Return on investments for shareholders, well obviously indirectly because it is a Chinese stock, is going to be pretty good. All right, so first up we have here China Commerce, which is Taobao, Tmall, Taobao Deals, Idlefish, this thing that we've talked about before. So China Commerce retail revenue, that side of the business increased 7%. Now China Commerce wholesale revenue, it actually increased 30% compared to last year. Now if you look at customer management, that basically remains flat for this quarter, but year over year that just grew 3%. Direct to sales and others grew 14% for the quarter and 43% year over year. And as for China Commerce wholesale for the full year, that grew 17%. Now again, the main reasons why you see here adjusted EBITDA margin going down is because of the increased investment in Taocaicai and Taobao Deals, the continued impact of COVID-19 and some other investments as well. But overall, I think pretty good numbers. As for the international segment, so Lazada, Aliexpress, and all the others there, so revenue from their international commerce retail business, that increased just 4%. The wholesale business, that increased 13%. And the same story goes here, right? Just that EBITDA margin is down for the quarter and down for the full year as well. As for local consumer services, that segment grew here 29% year over year. So that's quite nice. For the full year 2022, 23%. Now, again here, it might be growing revenue, but adjusted EBITDA, yes, is a bit better for this quarter, but still for the full year, not that great, right? And then the logistics part of the business, again, I don't really know how to mention this name, Cainiao or something like that. If you want to laugh in the comments, thank you very much. So that increased 16% year over year for this quarter. And then for the full year 2022, that increased 24%. And the story continues here. As for an adjusted EBITDA margin, it's become a bit worse for this quarter and for the full year. And one of the last parts here, first up we have the cloud. So that grew 12% for this quarter and 23% year over year. Now here, as for adjusted EBITDA and margins for the quarter, that actually increased. So that's quite nice. Even for the full year, it increased just a little bit. The margins here are just 2%, but still better than what most expected. Now, since this is cloud, and again, we've talked about China cloud infrastructure and everything like that, it's expected to grow for the next coming years as well. And lastly, the digital media and entertainment side of the business. So that one decreased 1% for the quarter and just up 3% year over year. It did improve adjusted EBITDA margins, but still in the negative for the quarter and for the full year as well. But it did perform a bit better. Now, as for innovation initiatives and others, That's down significantly for the quarter, but it's up year over year for the full year. And adjusted EBITDA margins, well, a huge decrease for the quarter and for the full year as well. So overall, to conclude, by the way, by the time I'm finishing this video, the stock is actually up close to 6%. That means that at the end of the earnings score, the market was pretty happy with what they've been hearing. Now, to conclude, I'm not a direct shareholder of Alibaba. Yes, it is in the channel's portfolio on stockcar.io just as a bet, because I do think that business-wise, it's extremely cheap, right? As you see in the numbers, it's a huge company, still free cash flow positive, buying enough shares to keep shareholders happy. But yes, there is the China risk attached to it. But overall, if you want to gamble on something and something that could have large returns, I think Alibaba could be one of those things. Now, obviously, there are other great deals currently in the market since, well, we've seen a huge market crash. But talking about Alibaba, I do think it's an amazing business, and I will repeat my point again. If this was an American company or even a European one, it would probably be trading much higher. Now, obviously, do share your thoughts and arguments down in the comments below. If you enjoyed this type of videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button, and I see you all in the next video. Bye bye.